What is going on, guys? It's Ryan C here, the Lux Trader, and in this video, the reason I'm making it is because I've gotten hundreds, if not thousands, of DMs, from you guys saying, please talk about psychology. I'm losing because of greed. I'm losing because of fear, and so I made this quick little video talking about my decade of experience in the markets and all the psychology I learned. Me working in the hedge fund, me just trading at the home, my losses, my wins, all of that. And I want to put all that in this video for you guys, for you to take, use. Please take notes throughout the video, because I feel like genuinely and truly this can really, change your whole psychology mindset when it comes to the market. So let's just dive right into it. So you right now in your current state, what's happening is you keep taking wrong turns. Every time a strategy does not print instantly, you reroute. And that's not because you're lost. You're not lost. You're just not staying on the road long enough to arrive to where you want to go. Right now, let's say you're here. You find a new strategy. You try it out for a week, 2 weeks, maybe even 3 weeks. You start to doubt yourself. Maybe you made some losses. Maybe you made some wins, and then you made some losses. And you say, okay, this is not working. You start doubting yourself. You start being unsure if it's going to work. And then again, you dead end. And you go straight back to finding a new strategy online, whether it's Instagram or YouTube or whatever it is. Or you just find a new strategy, and then the same cycle happens again and again and again. And so when you're recalculating, or are you just staying the course? Every strategy has seasons. And at the hedge fund, we didn't panic after one bad week, after one red week, because we understood that drawdowns are part of your edge. It's a natural part of trading. Having drawdowns, having losses, hitting your stop losses for sometimes 2, 3, 4 trades in a row is normal. That's just regular variance in the markets. And so retail traders, as mentioned, have a new system every 2 weeks. There's never enough data. They're always in doubt. And they never allow adaptation to occur. However, professional retail traders or institutional traders, they have one system for all seasons. They have consistent execution. They trust the process, and they let data do the talking. And data does not mean data over 2 weeks. Data means data over 500 to 800 different trades. Right now, consider yourself driving with no dashboard. You're trading without back testing, and that's like flying a plane blind. You have no fuel gauge, no speedometer, no engine light. You have no idea if the car or plane even runs. You don't know anything. Right now, your sample size is, for example, in these 2 weeks when you have a new strategy, your sample size is 25 trades. How can you figure out anything with 25 trades? Your confidence level is never going to grow. You're going to stay at low confidence because their sample size is too low. When you find a new strategy and you only take 10, 15, 20, 30 different trades in it, you cannot grow your confidence, right, guys? And so once you have 800 plus trades on one strategy, that's when you can say, okay, I know if it works. I know why it works. Or I know this doesn't work, and I know why it doesn't work. See, data gives you calm, and calmness gives you discipline. 4 losses in a row are no longer going to affect you if you know that, okay, in the long run, over 100, 200, 300 different trades, this strategy works. When you know that in the long run it works, a couple losses in a row are never going to shake you or like worry you or give you anxiety and mess with your psychology levels. You see, I like to think of it like this. It's either casino energy or warehouse energy. Let me explain. If your heart races when you're watching your P&L go up and down and tick, that's not trading. You're gambling with a few extra steps, and I know you've heard that sentence before. You see, professionals, we do not feel excitement. As a matter of fact, we feel nothing. Zero. If the trade's doing well, if it's going bad, hitting TP, hitting SL, zero emotions. Casino traders, aka retail traders, aka gamblers, they're chasing the rush. Every single trade is a bet. Dopamine is the real product they're consuming here. They're heart racing, they're refreshing their charts over and over and over again, they're watching the P&L tick up and down, and they sell it every time they win. A retail trader, you might even do this yourself. When you win, it's like, oh my God, it's like, oh, finally I can breathe again. warehouse operators though, professional institutional traders though, process goes over emotion. Every trade is just another, is just another trade until you move it to the system. And this warehouse operator style is boring by design. Entry, set stop, set TP, walk away. Structured, predictable routines, and outcome is just another data point that you can plug in and analyze later on. Consistency is the only product here. So this right here is excitement, oversized, revenge trade, break rules, blown account. This is typical retail behavior, and that's why so many people struggle with the psychology, because they go through these exact steps right here. And so my fix for you guys is win with defense. See, retail traders, they obsess over entries, right? Professionals, institutional traders, professional retail traders, they obsess over exposure. Think of it like in sports. Championship teams don't win by just scoring the most. They win by giving up fewer stupid points. Retail focus is, how do I win more? I need better entries, I need bigger R to R, I need bigger moves. Professionals though, how do I stop losing stupidly? How can I stop losing? A professional the way I think even is, okay, I know this is causing me to lose. I know when I enter on a B tier setup instead of an A tier setup, I lose. I cut that out. You remove bad patterns and you cut your avoidable losses. You cannot avoid all the losses, but you can, stop revenge trading. You can stop oversizing. You can stop over risking. And so all my loss patterns, move them. That's how I've been trading for 10 years in the markets right now and made over $5 million. So if you trade low quality sessions with low volatility, if you're forcing setups, if you're oversizing after you win, identify, remove, and repeat. And that's going to lead to the same win rate, fewer losses, and eventually profitability. Think of markets as seasons. They have weather. You see, if the market is trending in a certain direction, press size, add size. That means conditions align with your system, go bigger. This is your season to harvest your profits. If the market is ranging, then reduce size, because chop can be expensive. Half size, protect your capital by all means, and wait for clarity, wait for that trending market to come back. And if it's choppy, up and down and sideways and massive wicks up and down, then just stay out. There's no reason to trade. The markets will be there tomorrow, but your capital might not be. So having no setup, that's a setup in itself. Cash is a position. You don't have to be in a trade for you to have a position. Having cash, sitting on cash, that's a position in itself. Come back tomorrow. Make sure that you can come back tomorrow. So again, adaptive position sizing by condition. Trending, go ahead, press size. Ranging, reduce size. Choppy, stay out. Retail traders do the opposite. They size up during drawdowns to make their losses back. And that's driving faster in the storm because you're late. If it's storming, if it's hailing and raining and foggy, why are you going 220 miles per hour? Slow down. Stop on the side of the road. Wait. Wait for the conditions to be back how you want them to be. Wait for the sun to come back. And remember, guys, it's easy to get caught up in this. Your identity is not your P&L. You have to know that. A red day is not a personal attack on you. It's variance. Think of it like this. A poker player with a statistical edge still loses hands. That does not make them a bad poker player. Think in probabilities, not outcomes. You might think this as well. If you think that, okay, man, I lost 4 trades in a row. I probably suck at trading. No. But you did break your rules. You did revenge trade. You did chase your losses. And you quit. But if you're a professional trader, then your whole mindset shifts. Okay, my loss is just variance. It's just probability working out. And my edge is still intact. You log the trade, you journal it, you review your processes, and you move on to the next setup. No drama, no ego, none of that. Have a look right here. If you're a good trader, okay, you have a good strategy, you have a good setup, you have a 55% win rate, you target 1 to 2 R to R, 4 losses in a row will not make you unprofitable. Even if you have 4 losses in a row, you will not be losing money because your R to R is set. You have a 55% win rate. You can still make money. So your P&L, your win rate, these do not define you as a trader. These are not things that make or break you in the markets. You are not your last trade. Your edge, if it's a good one, it's still there and it will still play out later on. So stack your skills. Trading is not just one skill. It's 4 compounding skills on top of each other. And most people try to skip straight to the top. You can't do that. If you go to the gym, you're not going to get ripped in one day, right? See, muscle only grows through repetition, not motivation. The skill stack you need for trading is technical understanding, which includes setups, structure, price action, foundation, risk management, which is fixed rules, not suggestions, fixed rules like a law that you stick to. The third one is emotional regulation, which means detach your identity, detach your emotions, execute your plan every single time. And the fourth one is statistical thinking. Again, if you have a setup, a new setup you want to try it over 800 plus trades. 800, not 20, not 30, 800 plus trades, because sample size builds real confidence in traders. Let me tell you guys how you can really shift right now. The real shift is this. You have the same market, the same price action, but completely different results if you have a retail mindset or a pro mindset. The only variable here is the operator, is the trader, is you. The retail mindset is strategy hopping, emotional sizing, revenge trading, quitting drawdowns, and letting your identity become your P&L. All that, cut that out immediately. If you do any of these, cut that out immediately. The pro mindset is having one system mastered across hundreds of real repetitions, 800 plus trades tested, fixed risk rules, adaptive sizing, and emotionless execution, guys. If you do all these things, it's going to change the way you trade 100%. So stop searching for better entries and start becoming a better operator at the strategy that you already know. Master your emotions, master data, and master your risk. And once you do all that, trading is going to become very, very boring. And guess what, guys? Boring pays, exciting doesn't. Like I always say, you think less, you trade better. I'll see you guys in the next video.